and we're taking a look at Lyft today. This has been all over the news, Andy. Welcome to the show. Happy Monday.
Happy Monday to you as well.
All right, so this name, it doesn't have options traded on it yet. Just went IPO on Friday, but it is falling. Two big red candles on this chart for this this particular stock. But what do you guys at LikeFolio seeing as far as data goes?
Yeah, so we've been tracking Lyft for several years, and mentions of the company were on the trajectory that you would expect for a IPO this hot for several years. But as of late, we're starting to see that flatten or even dip, and it's one of those kind of qualities that we're seeing in a lot of IPOs recently. We saw it in Snapchat, Fitbit, Sonos, where these companies, they get so much investment and so much traction in the private equity markets that it's kind of like going to an IPO is the last resort for them. And unfortunately, what that means a lot of times is that these companies are coming public at extremely high kind of inflated valuations from a venture capital or private equity perspective, and then being dumped on public markets where they're susceptible to a lot more scrutiny. And I think with Lyft, we're kind of seeing that same kind of pattern play out, where you had an incredible run up until about 6 or 9 months ago in terms of adoption of the riding service, and now we're starting to see that flatten or even decline in terms of growth, and that's not good for a company going public. And like you said, in markets where you can't trade options and you can't short the stock, you've essentially got a one-way market. Very, very difficult IPO to get excited about.
Andy, is this a function of how long some of these firms are waiting to go public? Because I imagine the venture capital guys are a little happier today than some of the investors that traded it on the first day, right?
Yeah, what happens is that these valuations get pumped up so much because venture capitalists and private equity firms come into very small slices of the stock that are preferred shares that have a different structure than the rest of the stock, but that are able to put a very high valuation on the company. And then they need to take it public at that valuation or higher in order to save face. And a lot of times what that means is that at least recently, IPOs have been a little bit more of a dumping ground for these private markets to get rid of their stock rather than an opportunity for individual investors or the general public to get involved at earlier stages like they used to be.
I think it's true. These are pretty mature companies that are IPOing here.
Yeah, it wasn't like when Amazon came out. And Amazon was flat to lower for about 8 years, I think, post-IPO. I think just the fever and the fear of missing out by a lot of investors has everybody so excited about these IPOs. And we haven't had an IPO, government shutdown, kind of.
They lost $900 million in 2018.
Yeah, not a moneymaker yet at this point. But for more on social media, let's bring in TD Ameritrade Network's own Jenny Horn, back from her global tour.
The prodigal daughter returning.
I missed you guys.
Are you all pasta and
I am. Pasta and joy and
red wine.
Lots of red wine, yes. But I missed you guys, so
awesome.
and ready to talk Lyft.
Yeah. So, buttering us up, but go ahead. You got some stuff on social media. There's probably a lot on this.
I mean, absolutely. Lyft is kind of the first of these big tech heavyweights to go public, so it kind of sets the precedent for other companies. I mean, you have Airbnb, you have Uber, you have Slack, you have Pinterest, all these companies that are going to hopefully IPO, and I think that Lyft is kind of setting this tone. So social media today is kind of just like all over the place. I mean, people feel really mixed, and like you mentioned, something really important that I'm seeing is FOMO, so fear of missing out. And people kind of are tweeting like what's going to happen, but this FOMO is the general tone I'm seeing on social media, so which is pretty interesting.
Yeah, I mean, you got to remember, there's stocks like Groupon and Snap out there that, fear of missing out. You didn't miss much.
Exactly. But I mean,
to use a Sweet 16 analogy here, if they're setting the tone, they just airballed from a three-point shot, because stock's down 11% today, and remember, it closed way off the highs on Friday.
Yeah. And some people are definitely nervous. So our first tweet is from Ross Gerber, who said, "Just remember, when you see a really happy VC, you'll probably find an unhappy public shareholder soon after. We warned you. Lyft down 10%, now below IPO price." So what does this mean for its big competitor Uber? Because I mean, you'd be hard pressed to find someone talking about Lyft and not making the parallel to Uber.
Yeah, it doesn't bode well for Uber,
right.
But at the same time as Uber, they have Uber Eats. They're more diversified. They're bigger, a lot bigger.
They're acquiring companies left and right, too.
But I think Lyft, by pushing this IPO, even to come out, because it was a tug of war between Uber and Lyft was just like, let's get this thing out there, and I think the VCs are saying that too.
I want to ask Andy. Andy, I mean, Uber is the behemoth big brother of Lyft. Do you see anything parallel in the social media representation of the two companies?
Yeah, I think Uber has led the way, and Lyft is following behind for better and for worse. So we saw that trajectory of mentions of Lyft or people talking about riding in it. Also, when you look at consumer happiness, which LikeFolio tracks, we're seeing the same kind of thing with Lyft, where initially it was very, very high. They had incredible consumer happiness, much higher than Uber. But over the course of time, that has dropped and dropped and dropped as consumer expectations have risen, and also Lyft has just had trouble with scale. It's when you get to this level and trying to essentially drive the world around, eventually you run out of drivers that are competent, and you're not paying them enough, and everybody starts complaining about your service, and now things get tough right as you IPO. And I'll say one thing, look, if FOMO is what's getting you into this IPO, I got bad news. You've already missed out. That was 2 or 3 years ago when venture capitalists and PE firms were putting money in at a $5 billion valuation.
Yeah, and I think this is a good lesson for investors. I mean, just be patient. You don't have to get in on that first day. I mean, this stock...
They kept up in the price and up in the price, and then it was indicated higher. That should have been all right, I'm out.
Yeah, they do have a small float, and I think people were concerned about that. But you got another tweet for us, Jenny.
I do. Our next tweet is from Scott Redler, who says, Lyft, micro look as it failed the art of the first day. For today, it has to reclaim 78 or hold 72. Otherwise, avoid. So do you think this is good advice? I mean, we're on the second day of now public trading.
It's closer to 68 or 62.
Yeah, it's even below 72
It's
now.
below 70 now, but Scott is a technician. He looks at everything from a technical aspect. And Andy, you guys have been compiling data on Lyft for years, just based on the social media and tweets, the news out there. So I think the way that you guys look at data is a lot more pertinent in this regard than looking at a 2-day chart of it, right?
Yeah, I don't know how much you're going to get out of a 2-day chart. I think that a 6-year trend of consumer behaviors is probably a little more in line with what people should be thinking about when they think about investing in these companies. And I think Jenny brings up a really good point. This is the first of a lot of heavy hitters, but they all have this same pattern of massive amounts of venture capital and private equity going into these at preferred shares that are structured differently, that pump up the valuations as they head into an IPO. So I just say be careful this year when you start looking at these, and don't let FOMO bite you.